We wish to finish this AI work as soon as possible. Yes, it would be impossible for us to go without discussing semis. By the way, semis currently make up 10.7% of the S&P 500, down from a peak of 12.6% as the market rose. They now account for 7.5% of the S&P 500's net income, up from, 4% prior to this AI wave. So this isn't fake manipulation. They are rising due to profits. They represent a larger percentage of both market capitalization and total company profits. Such things cannot be extended indefinitely. Is it already too much? In my mind, I would say almost. I believe that everything we purchase has a higher semiconductor intensity. Yes, there is a chip in everything. There is a chip in everything. It has a chip, even though it might not be an NVIDIA chip. And that has been evident from the beginning, in my opinion, and it makes more sense now that the economy is becoming more digital. Native digital also accounts for a larger portion of our GDP growth. You believe that technology will eventually account for half of the S&P 500. I assume you believe AI won't be a failure. Yes, exactly. AI, in my opinion, is what's contained here. A lot is happening here. Indeed, this figure has multiple layers. Now, the upper half of this figure, which resembles waves, shows the difference between the total number of persons of working age and the number of prime-age workers. In other words, if this wave is positive, it indicates that there is a labor shortage in comparison to the whole population. All right, I understand. You could therefore wonder what businesses do in the event of a labor shortage. You must spend money on automation. Indeed, the price ratio of tech to the S&P is shown at the bottom of the chart, and it has always gone into a tailspin whenever there has been a protracted labor shortage, which I believe we recently experienced. As a result, businesses are investing more in technology. Yes, since inflation would result otherwise. We recently experienced the mother of all protracted labor shortages and inflation problems outside of the 1970s. Yes, therefore, it seems sense that businesses are already holding several meetings to discuss how to ensure that this doesn't happen again. Yes, exactly. The fact that there is an even greater labor shortage worldwide is a second overlay on top of this. Yes, and the main source of replacement technology workers is the United States. One of the chapters in my recently published book is titled Just Own the Damn Robots. That remains, in my opinion, the most evident investment argument out there. The tailwind there seems to be constant. However, I'm not sure which stock it is at any given time. There may be a few poor quarters, such as in 2022, but overall, no American corporation is asking itself, how could we spend less on tech? According to the journal, BlackRock is getting ready to introduce a more than $30 billion AI investment vehicle. $30 billion with Microsoft to construct energy projects and data centers in order to satisfy the increasing demands brought on by artificial intelligence. Whoa! Yes, but that's surely not enough cash, isn't it? For OpenAI's capital expenditures, I estimate, are around $50 billion. You most likely read the report this week in the New York Times about the internal dispute at Goldman Sachs. I was scared by the dot bust, admits Jim Covington, one of their analysts. He started his first analytic job at Goldman Sachs when he was just 22 years old, and after a few years, they fired his entire team. I believe he is admitting that he sees the world through that lens. However, he's essentially stating that whenever we create too much of something that no one actually needs, it doesn't turn out well, and he's seeing the same similarities now. I don't see where the ROI is on $1 trillion in spending, he's essentially arguing. Therefore, Goldman converted it into content pretty wisely. They have some incredibly bullish folks there as well, which of course they have. They invited an audience to hear their strongest AI bull dispute with their largest AI skeptic. Whether AI is 2.0 or something else entirely, this is the largest investment bank in the world. It's difficult for everyone to comprehend, in my opinion. For example, did we overbid on these equities, or are we underestimating? OpenAI is, 100? Is that the number they raised? Yes, these are so, correct. They will now be fully operational for profit. They will not act as though they are engaged in charitable endeavors. But even if the internet proved to be genuine, it also turned out that a lot of unnecessary investment had been made before it. How do you know that this AI thing isn't preparing us for this? How can you be certain that we're not repeating the same mistakes? Yes, we do not have perfect foresight. However, I believe Covington ought to go back and look at those interviews from the 1980s, where the experts were the ones who disregarded the future of personal computers throughout the argument. All right, still with every technological advancement, there have been doubters. Yes, well, he might be correct too. Long term, he might be right and then wrong. That is an additional possibility. So one thing that hasn't been researched is that the dot-com stocks that survived the 1999 stock market crash were the largest winners. Yes, because the structure was highly advantageous after the fiber prices fell, which made room for Priceline, eBay, and social media. Netflix was able to transmit without having to pay for internet carriage because there was no reciprocal termination. However, in 1999, you needed to know to buy Priceline instead of eToys. For example, because neither of them was going to make it. Yes, all right. For example, suppose that the price of AI computing crashes due to an AI crash. When the cost of computation decreases, who benefits? Perhaps it's all the businesses that use it, like you mentioned. Meta, yes. Indeed, if the price of GPUs decreases due to dwindling demand, end users may benefit more than the GPU salespeople themselves. Indeed, who gains from having a PhD-level employee that you can now get for a fraction of the price. Today is an exception then. In this market, which has greater sway, both are significant and they represent various investor perspectives. You still desire to own the greatest businesses and the most significant themes, in my opinion. That's Apple and NVIDIA, after all. Additionally, they will truly function throughout any cycle. However, when the market starts to think that the Fed would return interest rates to neutral, the cost of money, mortgages, and vehicle loan rates, these are really powerful tailwinds for small-cap stocks and cyclical firms in particular. Therefore, I believe that this is the reason I would still like to place a highly informed wager that tiny caps have a strong chance of performing exceptionally well over the course of the next 12 months, and possibly even until the end of the year. We haven't discussed your granny photographs in a long time. Please remind us of your reasoning for liking some of these stocks. Yes, indeed, the foundation of granny shots is the notion that there are themes such as several secular drivers of an economy. We want to hold the greatest stocks in those themes. Therefore, our original granny shot model examined AI, cybersecurity, energy security, and millennials as a generation. And that's actually where the granny photos and names like Apple and NVIDIA came from. Since 2019, NVIDIA has been on that list. Therefore, I believe that it's always crucial for investors to locate the finest firms and stick onto them for the duration of the cycle, rather than trading the best names. All a nice reminder. The little caps that I know you're keeping a careful eye on had a nice day, Tom. But is it September or not? Yes, we had a difficult beginning, but part of that is now behind us. Indeed, if viewers are somewhat perplexed, I believe that's how the next 8 weeks leading up to Election Day will be. It's a really difficult time, in my opinion, since nobody can be certain until they truly know who is in the White House. However, there are some encouraging developments in the works, and the Fed will meet next week. Given the positive inflation numbers and the need for help in the labor markets, I believe the markets will gain some confidence in the Fed's decision to make some cuts. We do, in my opinion, trade well leading up to that meeting and possibly even a week or two later. Do you believe we will bounce around in the 5,300 to 5,700 zone, or does the market require a 50 basis point cut? I believe that a 25 or 50 has both dovish and hawkish connotations, don't you? In the end, I believe it will depend on whether Fed Chair Powell conveys that they believe we are beginning a cycle in which they are certain that we are heading back.